Hello everyone and welcome to the Investing Angles channel. Welcome to our weekly digest. In today's video, we will cover several key developments across major asset classes, setting the stage for the trading week ahead. Volatility. Strong bullish closure of a daily and a two-day frame suggest heightened volatility early next week, but questions remain. US dollar. We will discuss its long-term trajectory and touch on the recent technical signals. For bonds and yields, a closer look at the 10-year to 2-year spread, the potential for negative territory, and technical signals from TLT's Elliott waves and candlestick patterns. For precious metals, analyzing recent developments in silver and SLV ETF. For oil, evaluating the midterm outlook and technical signals to assess whether the current downtrend could extend further. A critical event for Bitcoin's weekly MACD and an overview of the perspective today's closures on multiple frames. For equities, a sector-wide review of the SP 500, major players, and a deep dive into Meta. And from the perspective of Elliott waves roadmaps, breaking down the potential path for Nasdaq, S&P 500, and Dow Jones as we assess the broader market trajectory. Before we start, hit the subscribe button and let's begin. This is volatility candle map as it closed on Friday. So what we are seeing here is a very strong bullish message. So the bullish engulfing on the daily frame and the bullish engulfing on the two-day frame. So technically wrapping up this huge hammer. So the chances, based on these candles, the chances for heightened volatility on Monday, Tuesday, and possibly beyond are fairly high. Well, we can see that the weekly frame is not as conclusive as we think, and there is still a possibility of a move down here. However, it's difficult to evaluate the weekly frame until we reach at least the middle of the week. And let's see what kind of candles developed on Monday, Tuesday time frame. So now let's move on to the dollar. This is the dollar index. Again, if we look at the smaller frames, we are seeing a very good potential. If we look at the 12-hour frame here, we can see that dollar formed a bottom here, or possibly even a double bottom, and with a good chance to move higher on Monday. And the Monday's formation is possibly a tower bottom as well. So the chances for move higher are fairly significant. And if Monday's move materializes, dollar moves up, then it will be a bullish engulfing on the two-day frame on Monday. Now, speaking about the larger frame, this is the monthly. The closure in Q3, dollar formed a very nice three white soldiers, opposing doji in January, and right now most likely it is going to form another posing or consolidating candle before moving higher. So this possible the range bound move can extend for a couple of months. So far we are not seeing any reversal patterns here. And if you look at the dollar, a larger dollar chart, this is what we've been tracking since November 2020. This is our initial chart, and this was the finalized one in November 2023. So far, no changes to it. We are expecting dollar to move higher towards these targets. And this is somewhere between 120 and 112. And if this is indeed the case, then we might see some acceleration upward by the end of this year. Now let's move on to the bonds and yields. So what we are seeing here is somewhat concerning. So first of all, I'd like to emphasize that the 2-year yield formed a bottom on Friday, and the 5-year one formed a tower bottom. So it's a double bottom and a single bottom. Technically, these two are set to fly higher. If we look at the 10, 20, and 30-year yields, so they are slightly behind, but their formations are also fairly strong. If we just took one frame lower, which is 12-hour, we can see a tower bottom here. So with a very good chances to extend the gains on Monday. And this is the concerning part, by the way, because the 2-year and 5-year yields suddenly started to move much higher at a rapid, with a rapid move, and this is the spread, 10 minus 2-year, and what we are seeing here as a result of such imbalance, we are seeing a strong move down. This is the weekly frame, weekly closure, and this is a tower top here. So this the spread is hanging just 0.2% above the zero line, and if we see a strong follow-up after this move, well, that spread would turn negative, and this is something that we have been discussing for a while. And this is the Elliott wave break for this one. For the spread, we are seeing that potentially this is the spread is developing an impulsive structure downward with a very good chance to break below the zero line, turn negative. We know what it means, and in general we discussed more about this in our previous video, so you can refer to it or check on our website for the weekly update. Speaking about TLT, this is the projection. Potentially the short term, potentially TLT formed a bearish flag and right now is trying to accelerate downward. So if the flag is broken, not broken, it's if it is complete and the move TLT breaks through the lower boundary, here most likely this will be a complete structure, and these would be the two potential paths here, either ABC of a bigger correction before moving down, or a straight move down. Depends on what kind of it depends on what kind of structure wave structure it will develop for the next wave down. These would be our targets. Now let's move on into commodities section and check what is happening with silver. Silver formed a couple of strong bearish candles at the end of last week. On Friday, the daily candle closed with a practically confirmation. This is a minimal confirmation for a top on a dark cloud cover. Today is tracking for a dark cloud cover and a potential reversal here, but we need more information here and more data. Weekly candle is not very conclusive, so far it could be either bullish or bearish depending on the next one. And I would like to remind that in Q4 silver closed with a very strong bearish candle, and it might take its toll very soon. Speaking about silver wave structure, this is a micro level. What we are seeing here is that silver invalidated a potential impulse upward and possibly formed an ending diagonal for wave of for the wave that it started from the beginning of February. So it could trigger a reversal, a much bigger one. So far, it's not conclusive because silver still might make a higher high. However, it would be just a diagonal structure, like I showed here, like I'm showing here in green. However, there is also a chance of developing an impulse down. So the next couple of sessions would be crucial indeed for defining this potential path. And if we look at SLV ETF, it's very concerning because this candle is much stronger than the one that silver developed on Friday, and this is a bearish engulfing, and particularly the previous one was a topping doji and a broken attempt to invalidate it, and now a strong bearish engulfing. If SLV moves down on Monday, then it will be a huge bearish engulfing for the 2-day frame also on Monday. So we're not talking about weekly because it can flip in both ways right now, and we'll talk about it closer to the middle of the week. Now let's move on to the next section here. This is oil. What we are seeing, that oil is practically failing since we made a call at the 70 when it was 77. So oil is down more than 8%. So far, if we look at the weekly frame, this is a strong bearish candle, and the 15-day frame, which is closing on Tuesday. In order to reverse the odds here, oil needs to rally about 4% in the next couple of days, by the end of Tuesday to be exact. It's not impossible. Let's see how it develops. And so far we are tracking this closely in our daily reports for oil and natural gas. If we look at the monthly frame, so far it is tracking bearish, very bearish, and if it closes with the candle like this, it will be a strong reversal of the recent attempt to start the rally. To say something about the daily candle, daily formed a potential harami if we see a confirmation above and the rally above the Thursday high. Well, it could be at least a short-term bottom. We'll see the Mondays, how it behaves on Monday. So far, everything looks very bearish. And speaking about the chart, this is the chart that we proposed back in December. And so far, it is tracking really well. So oil advanced over 11%, found the top in this rectangle in our target, and right now it's falling for about 11% since the top. Well, so far we are not seeing a reversal pattern, and if you're interested in the short-term perspective, we shared this information in our weekly reports yesterday. That's about that was about commodities. Now let's have a look at the cryptos, at Bitcoin in particular. So today is a very important day for Bitcoin. It is closing multiple frames, and if you can see, what you can see, that it potentially it is hanging above the 100 days moving average and formed 3 dojis in a row, which I would say they are more bearish than bullish. And if this is the correct hypothesis, we should see a strong move down. And this is not the only thing that is closing today. So the daily is the least of my concerns. If we look, for example, at the 5-day frame, which is this one, we are seeing it's a strong bearish candle. And looking for 8-day is even more conclusive. So this is 8-day closure today in 5 hours. A closure at this level, or even Bitcoin moves a little higher. Let's say, how much room does it have? Well, approximately 1.5% wouldn't make any difference. So the closure like this would be a confirmation of reversal on this big frame, 8-day. This is a dark cloud cover candle, and this is a confirmation. And if we look at even bigger frame, which is also closing today, this is a 10-day double weekly. So what is happening here is because it's going to be a bearish engulfing. And even if Bitcoin rallies about 6% in the remaining 5 hours, it wouldn't make a difference. So it will still be a bearish engulfing. Bitcoin needs to move much higher in order to revert these odds. And that's a big concern. So this is the chart that we shared a couple of last week, a couple of days ago, and we said that Bitcoin is probably going for double top formation or something like this. So far, it is on track. It's already tested once the neckline. It's been rejected, but it looks like it is insisting on breaking it. Let's see how it moves. And the final chart about Bitcoin and the concern that we have this weekly MACD bearish cross. It happened on February 5th, and today it looks like it is on track for recording. 5 hours left, and Bitcoin bulls and investors, they need desperately to reverse this one. Otherwise, the consequences could be dire. And that's what happened to previous crosses. I ran some statistics, and we say the minimum drawdown would be 21%, maximum 85%, and average 53%. And this was our call on April 2021, when we said that Bitcoin is going down to 30 when it was almost 60. Well, the history can repeat easily here, particularly taking into consideration the size of this weekly MACD. Okay, so that's been all about crypto and Bitcoin. Let's now move on into US major indices, what is happening there. So first of all, this is the candle map, and this is the candle closure on Friday. What we are seeing here is quite concerning. First of all, SP500 or SPY, QQQ, Nasdaq, Dow Jones, and Russell. So S&P and Nasdaq formed strong bearish engulfing candles, and Dow Jones and Russell, they formed confirmations to dark cloud covers. So altogether, these are very strong messages, and we need to be prepared for a very concerning, possibly, and very huge day on Monday and potentially on Tuesday. If we look at the weekly frames, however, it's interesting because the weekly frames have bullish candles. Although they are not as bullish, so they are closer to neutral, but nevertheless they are green, and the chances for the next week to be green are still there. It will depend on what will happen in the middle of the week, and the beginning of it looks like it's gonna be red. So we'll see. Now let's have a look at the major sectors, what we have for closure on Friday. Financial, industrial, technology, consumer staples, healthcare, consumer discretionary, and XLE and utility, they all closed with bearish candles. And some of them stronger, some of them not so much. Utility, I would say, is closer to neutral. The other 7 are not bullish or not neutral. They are bearish indeed. And we'll see how it. So technically, this is emphasizes the perspective for a red start of the next week. Now let's have a look at the bigger players. What we are seeing is Microsoft. It's not only formed a bearish candle, but it also flipped its 8 by 20 EMA lines, weekly lines, into a bearish cross. Amazon closed with a bearish Harami candle, the same for Apple. Tesla is clearly bearish, so it confirmed a top, potentially a double top. The same happened for Google. Google is also bearish. If you're interested, we posted yesterday a little study about Nasdaq, Google, and Palantir. We were talking about what Google investors should expect in the nearest future. Speaking about NVIDIA formed a very strong bullish engulfing, potentially signaling higher prices next week. However, given some technical support here, the candle is not as strong as it could be. We'll see. So even if we will see some higher prices early next week, it doesn't mean that the candle will be green one. And now Netflix is looking bullish. And now let's have a look at Meta. This is the most interesting thing that I've seen for a while. So if we look at the daily frame, it tells technically nothing, and we might see that Meta is pursuing its next impulse upward, and well, no, nothing should happen, no concerns. But if we turn on the after hour frame, after hour trading, we might see very concerning development. So, and this is what I mean. If we look at this frame, or if at this wave that Meta formed since the middle of December, we can clearly see that this frame, this wave is bearish, and at best it is an ending diagonal. And this is what I mean. Oh, this is wave 1, this is wave 2, this would be wave 3, 4, and wave 5. And what else is interesting about this, that wave 5 technically it's a diagonal itself. It's fairly rare case, a double ending diagonal, 1, 2, 3, 4, and 5. Let me put a different color so that you see better. So this is one diagonal, big one, and another one, a smaller one. So technically, having two ending diagonals is just a very, very strong bearish message, and I would say that Meta can go vertically here, downward, and find support at 583, which is down 20% from the most recent top. Well, that's the perspective for Meta. Let's see how it goes. This is our call and our projection. Whether this is going to be an impulsive wave and Meta will go down further below this line, this remains to be seen. But the chances for it to move down strongly are fairly high. All right, so now after discussing these the sectors and bigger players, let's move on to index themselves. So this is our Elliott wave projection for S&P 500. This is what we are tracking right now. We are seeing potential for a very strong impulse that S&P formed at the end of January, and since then it's been trying to reverse it, but unfortunately unsuccessfully, because the waves that were formed here, they are not bullish, they are bearish, and lots of overlaps, and most likely it's a zigzag. It could be a ABC zigzag for wave B, and another this would be a lucky pass scenario if we have an ABC in blue. Let me visualize it. This is what I'm talking about. This would be A, B, and C. To making it this significant correction, and after that restarting the rally. That's a happy path. If another path that we are tracking, and it's also possible. So we have a purple one, wave 1 complete here, wave 2, and this is wave 1, 2 of the next impulse down. Let me mark it here. So this is the potential, and this would be wave 3 here. Another thing, and the final one that is still on the table, potential for an all-time high with an ending diagonal, as marked in the green path. So assuming that the ABC correction was done here, and right now S&P is forming ending diagonal. So I would say that this is the least probable path at this moment, and right now we are looking at either blue or purple. I think that the wave tomorrow on Monday and Tuesday will tell us the story. And now let's have a look at the Dow Jones. This is the chart that we shared and spotted on February 6th. So far, it's been unchanged. We can see that Dow perfectly hit our target for wave 2 and is following right now down. So we were expecting Friday to be quite significant, up to 1.7 or even 2% down, but not so fast. Let's see how Dow continues. There is a good chance it will hit this target and continue on with an impulsive wave. So the wave upward was clearly broken impulse, and the chances for an impulse down are significant. And the final chart that we are going to talk today is Nasdaq. We discussed this chart and developed it with you yesterday in our video for Nasdaq, which also featured Google and Palantir, and this is the refined one. So what we are seeing is a potential for an impulse down. This was wave 2. If you want to look at the bigger picture, check our video or look for a refined chart at our website, investingangles.com. So this is potential impulse 1, wave 2, another impulse, smaller one for wave 1, 2, and the potential setup 1, 2, 1, 2. If this hypothesis materializes, then we would see a very strong down move on Monday, potentially 1.52% easily. And speaking about Nasdaq usually uses longer Fibonacci ratios for its wave 3. So here in the red rectangle, I put an alternative 3 specifically for Nasdaq, because this is also a possibility at the moment. All right, so that's been all, and let me summarize our discussion. The market is expected to experience elevated volatility, particularly early next week. Meanwhile, the US dollar is likely to strengthen, and bond investors may start demanding higher rates. In such an environment, commodities and the crypto market could come under pressure, leading to a retracement or, in oil's case, a continued downward trend. While heightened volatility is expected, major US indices are aligned for a potential decline, possibly a significant one early next week. If there is no immediate recovery on short-term frames like the daily and two-day charts, these moves could impact larger time frames, potentially completing topping structures and triggering a domino effect. Given this setup, the importance of the next 2 trading sessions cannot be overstated. As always, we will track these developments in our Daily Waves report. Follow us on YouTube, Twitter, Telegram, and our website investingangles.com for timely updates. Thanks for watching and happy trading.